We thank them, which is a next generation high quality product development and software solution company with an endeavor to offer cost effective high end technology. So the stage is set and we are ready for a panel discussion. Allow me to welcome our speakers, please, with a thunderous round of applause. Let us welcome our moderator, Anirban Guha, Head of Risk Analytics, Aditya Birla Capital Limited. We'd like to welcome our panelists, Mehul Gandhi, Executive Director and CEO of Reliance Arc. Big round of applause, please, ladies and gentlemen. Thank you so much. We'd like to welcome Rajaram Manian, B, Chief Risk Officer at Tiger Capital. Can we have a big round of applause, please? We welcome Mr. Piyush Jindal, Chief Credit Officer at Hero Housing Finance Limited. Warm welcome to Mr. Rishabh Goel, co-founder and CEO at Credgenics. And we'd like to welcome Mr. Neeraj Kaushik, Deputy CEO, iFinance Private Limited. Big round of applause, please, for all our esteemed panelists. Thank you so much. Requesting you to please take your seats. And with that, we are ready for our panel discussion. Thank you, sir. On the credit and collections ecosystem. So with that, I hand over to you.
Thank you so much. Thanks to this lovely audience. So before we start, I just want to kind of request my guest over here to give a quick introduction up there. So starting with Rajaram, I mean the sequence we have on the screen.
Yeah. Good afternoon. My name is Rajaram. I am the Chief Risk Officer for Tiger Capital. Earlier it was Adani Capital. I manage risk and analytics for them. Been in this industry for about 27 years, mostly with banks and NBFCs, and handle corporate finance and retail finance. Of course, enterprise risk management and the entire gamut of risk. Thank you.
Hi. So good afternoon. I am Neeraj Kaushik. Total, I have close to 32 years of experience working with various industries. I started journey with Larsen Toubro in the construction mining machinery segment, and from there joined ICICI Bank, ABN AMRO, RBS, Bajaj Finance, Religare Finvest, and currently for the past 6 years I am with iFinance. Here I am working as a Deputy CEO and taking care of business, collection, and other functions as well. Thank you very much.
Hey, hi, I am Rishabh. Good afternoon, everyone. So I'm co-founder of Credgenics. We are a debt resolution platform launched maybe 7 years back now. Started it when it was not the topic of discussion. Now we are mostly working with almost 150 plus banks and BFCs in India, Southeast Asia and Middle East. So yeah, looking forward to the interaction.
Yeah, good afternoon everyone. I am Piyush Jindal, currently serving as Chief Credit Officer with Hero Housing Finance. And over the last 2 decades, I have a privilege to work with institutions like ICICI Bank, India Bulls, India Infoline. I feel that in credit, we don't just assess the profiles, we enable possibilities. And in today's Credit and Collection Summit, what we understood from various presentations is that the biggest challenge or opportunity we have to do is to embed the empathy and the ethics in our collection and credit system. So I'm looking forward for the meaningful discussion going forward. Thank you.
Hi, I'm Mehul Gandhi, Executive Director and CEO for Reliance ERC. It is one of the leading retail asset reconstruction company, and I have a work experience of roughly around 25 years, all into ARC industry. Earlier worked with Edelweiss and Arcel as a CFO, COO, and largely into ARC industry, leading acquisitions, finance, operations, credit, and here obviously the value insight with Credgenics has given an opportunity to see, and we have done a good amount of getting an understanding from them on AI and other digital platform where we have definitely increased the efficiency in the collections in our organization, and we see a larger scope way forward from banks and financial institutions to recover as a channel partners along with them for the recovery. Thank you.
Thank you. Thank you so much for your introduction. So, for the next half an hour or so, 45 minutes, that few areas that we are planning to cover. First is the importance of risk governance and resilience, asset and portfolio quality management through AI and ML, the reliability of the data and the use of that particular data, how we can use that, empathetic collection and recovery, the future looking innovation in lending and collection. So these are the 5 broad areas that we're trying to cover. And with the first one, maybe I would go to Mr. Rajaram, that if you can just share a little bit of your experience around the importance of risk governance and resilience.
Thank you. I think that's the billion-dollar question about balance between risk and growth. I think we've gone much ahead of that. To answer this question, I think now the question should be, how do we grow with the resilience, right? I mean, and how do we remain precise? I mean, that's the question that we all need to answer. Because risk is no longer a control function. It's going to be more of a predictive, more of accommodative, and it's about targeting what you want to do, what kind of product that you want to lend, what time frame that you want to lend, which locations you want to lend. I think that is about risk management now. Today's underwriting is gone beyond the scorecards that we used to have. Now it's more of situational awareness. I think it's about not only data, but actually the context of the data that is going to be used for underwriting. The segment-wise risk appetite. I mean, that's something that every organization actually work on today. Beyond your normal underwriting, and when you spoke about governance, it's not just about reporting. It's more of adaptive intelligence. It's like recalibration of the policies that you have, and also I would say it is becoming not only model creation. The model governance that you spoke about. Even the regulators are quite vocal about how do you manage the models. How is the transparency on the models. It can't just work on a mathematical or an AI model. And I think finally I would like to say that it's not about managing your NPAs or managing your numbers, but I think it is more about creating a portfolio which is intrinsically shock absorbing. That's the future that anybody looks at risk management now.
Thank you so much. Actually, I mean, today ma'am has set the context in the open note. I remember that beautifully, how it is not only that India has moved from 10th to 5th position, simultaneously India has fully concentrated on their data enrichment. And currently all the bureau, that they are mostly depending on the existing customer on the bureau, from there the NTC segment that they're looking into, so that on the non-salaried segment, small entrepreneurs or something like that, how we can leverage that data with the gig workers information, with the income tax data, how we can do that with sitting on this plethora of data. And we are kind of moving from 5th to 3rd position in next couple of years that we're targeting. My next question would be to Mehul, that how you kind of think that lenders and organizations can leverage this data maybe through AI, ML or other techniques.
So what we have experienced over a period of time, I mean, I'm there in this industry since more than 2 decades, worked with various banks and financial institutions on, and fortunately we have bought a portfolio which is retail, with a small ticket size since more than a decade. And traditionally, everybody knows that we generally do a calling or a field operation activity and some of the legal recourse which was available. So generally we are getting a portfolio which is high in vintage from largely from PSU banks as well as from a private sector bank. So we were also struggling to get an efficiency of the manpower as well as the system and processes through our channel partners and maybe through a various AI and a modular platform which is available nowadays. So now we will be in a better positions to do a slice and dice of the data, workflow, and the risk parameters as well as the compliance processes and the kind of things we have done automate over a period of time through obviously the AI tool and other mechanism which is available. So I think so the efficiency in the recovery has increased drastically. Even in the Indian context, we don't see the traditional method of recovery, which is a calling or a field activity, which is parallel, which will remain in the ecosystem. But this tool has given a greater clarity in terms of increasing the efficiency of the processes, people, and you can utilize the manpower in more effective manner. So we see a good amount of opportunities for bankers also when we are growing our economy from a 5 trillion GDP, which is the target. So it is a good start, and this will add value to the ecosystem.
That's definitely because, I mean, typically we are sitting very next to the terminal 2. When we enter in the road, we see for offering loans, initially, I mean, couple of years back, it was loan in maybe 1 hour, then it reduced to 30 minutes, then it reduced to 10 minutes. But nobody is saying that collect money in 10 minutes. So when your systems are in place, I mean, definitely the more you need to scale, it is impossible for humanly and kind of physically be present to the every customer and kind of try to collect the data. And especially, I mean, the kind of, I would like to go to Neeraj because he is the deputy CEO of iFinance, and the segment the iFinance operates and the kind of ticket size they operate. I would like to understand for the typically the collection activity, uh, how the data is being considered and how reliable the data is. So if you can just put us some light on that, Neeraj, that would be really helpful for us.
Yeah, thank you for asking this question. So data reliability is very, very important, both for credit as well as collection. If reliable data is there, then underwriting or credit profiling of a customer is very, very easy. However, in iFinance, in our company, we deal with the customers, those are informal. Those are underserved. So data is very limited data available for these customers. So we do profiling of the customer first to underwrite these customers. How do we profile these customers? So there are, you can say, alternate models, alternate data available, and through alternate data, we profile these customers to extend loan. So alternate data can be like mobile data, mobile UPI data, your telecom data, your, you can say, various utility payments data, and then e-commerce platform data if somebody is available on e-commerce. All these, using all these, you can say, methods, we try to create a profile of the customers and then we try to extend. If something more is available, so what we do, we get in touch with the customers and try to assess his, you can say, cash flow. And through cash flow, we try to assess his overall, you can say, total turnover sort of thing, what sort of margin he is having, then whether he has got the seasonality in the business or not. Then we can also try to identify what sort of inventory he is having. With this, there is a additionality to the profile. Now, majority of the you can say informal sector, you will find very little credit history. So what we do, we try to conduct you can say psychrometric test with the customers. So through psychrometric test, you will try to gauge whether this customer is having risk-taking ability or not. If he is having risk-taking ability, what sort of business he want to grow. And with this, we try to profile the customer to the extent possible. Once everything is, you can say, sorted out, then what we do, we send our field officer to the, you can say, customer place. And he tried to gauge the living standard of the customers. He tried to find out the number of dependents of the customers. And then complete profiling is there. On that basis, we normally do, you can say, underwriting of these customers. While in iFinance, since we have got 11 years experience now, so we have in-house, you can say, credit models to underwrite such customers. We have got you can say cluster-based underwriting methodology, in which if a particular cluster, like shoemaking cluster, in which a ladies shoemaking cluster underwriting will be very different from the gents shoemaking cluster. Similarly, if it's a sports shoe cluster, we will have different underwriting method. We do basis input, output method, we do like workstation methods. So like if one place, 10 guys are working, these are workstation for us. And we know how much is the productive one guy can generate, or one, you can say, employee can generate. Those sort of underwritings we use. Similarly, for the collections, also we use various models while doing underwriting, while doing collection for such customers. So when to meet, how to meet, and whom to meet are very essential, and we do lot of AIML data analysis while covering the collection of these customers. So underwriting of such customers are difficult but not impossible. You can do if you are flexible in your approach, you are very localized, and you can think of something out of box, then you can underwrite these customers and can reach these customers for the collection purpose. This is all from my side. Thank you very much.
Thank you. So from here, I would just like to go to Rishabh, because the very important factor I think Neeraj has touched upon, that while kind of through the application process, they do some bit of psychometric test also. I'm quite sure that whoever is part of the any kind of bigger organization and the structured any company that we go through, we also go through a psychometric test that whether we fit into the organization's culture or not. So that kind of test we also go through. The crux point is that the thing that he has mentioned, that I mean the social media data, transactional data, different data that is constantly coming, and the reliability check is one of the major thing to look into. Mehul has just mentioned that they have adopted AI and they see that, I mean, to kind of go alongside with the scalability, that you have to do that. Just wanted to understand from you that we have already heard that these things are benefiting, but how these things are benefiting? If you can go a little deeper into that for the audience and the panel to understand this.
Sure, sure. No, thanks. And I think good afternoon to everyone. So the discussion topic, as we all say, right, it is how AI is evolving and helping in credit or underwriting and collections particularly. The main core reason for it is, and also we touched upon that India has become now the 5th largest economy, and it is poised to go to 3rd, right, very soon. But overall, if you see the gist, right, it is actually the circulation of money, like which actually is important in the developed economies. Whether you talk about the top 2 economies, right, there's a lot of circulation of money, and the reason is that the credit to GDP ratio is very high. So essentially, it means that the credit is available to almost everyone who requires it. In India, it's not the case. We are sitting on a lot of data, but not leveraging it to the fullest potential. And all these tools are just making, like, so just from a data point perspective, right? India has roughly 1.1 billion mobile users, and almost 850, almost 85%, 90% of them have internet. And there are some 85 billion UPI transactions which are happening every year. So the data which is available with us is huge, but how we can leverage it is, it's a big question. Now leveraging it to essentially accelerate the speed of financial inclusion, which essentially means accelerate the speed of credit. Now it can only happen when the collections is in check. I think the only reason a lot of lenders who are sitting on good balance sheet, right, are skeptical in terms of lending is that their collections, like there's some uncomfort with respect to collections, that it is not scalable at the same pace the lending is. Right, so a lot of data has been leveraged now on the credit side and even underwriting side. How the same can be done on the collection side, as when Neeraj spoke about that, how a profiling of a customer happens, or a CIBIL bureau check happens, or other thing happens. But some of these data cuts and important information are not leveraged when it comes to collections. Loan disbursal in 10 minutes, and you rightly said, but there is no collection in 10 minutes. So it is important that the same methods you are leveraging on the digitization wave to underwrite, you start using on collections as well. And the way to do it is, like we spoke about AI. So AI also can be broadly classified into 2 sections. One is a generative AI, which is essentially mimicking a human intelligence in terms of even talking, like for example, a lot of Gen AI based voice bots or video bots, which are trying to mimic how a caller would react in a much more compliant way, much more empathetic way, because there is no scope that a bot can say anything harsh or rude even when the customer is rude, right? So that is one part of it. Second is the predictive AI, where we are actually trying to understand which borrower to approach by what method, as in how we do it in credit. The same thing has happened in collections as well. Like you don't parallelly like unleash all the channels of calling, field, digital, legal, etc. on a single customer, versus you figure out and prioritize which customer to be targeted via what mode, and so that it becomes firstly a saving of cost because you're not parallelly adding so many channels. It becomes more scalable. It is also from a customer standpoint, they are not repeating multiple communication for the same thing, which essentially ruins their overall experience. Because from a lender's perspective, they have to think about their LTV, right? Their long-term value and lifetime value of the customer. So they cannot possibly just ruin the chance of collecting very harshly from him and then like evading him from his entire lifetime value. So how you can make it both empathetic, scalable, cost-effective is what a lot of platforms like ours are doing, trying to safeguard and also reduce human dependency. We are not saying that human dependency can go away from collections. We are saying we can reduce it or minimize it and make it more scalable. Like for example, a call center running with maybe 100 people, right? So maybe the quantum of loan book which can be handled by them can be 2x or 3x versus replacing them or removing them, because that human touch will not go away. So a lot of AI tools are helping in terms of using this data, making collections more seamless, which essentially affects credit, like your ability or maybe your flexibility to underwrite a customer depends a lot on how you are able to collect. So yeah, that's.
Thank you so much. So from here, I will just like to go to Piyush, that whatever we have heard, that I mean, when we are getting the data, we are strategizing it, and then we are planning that, I mean, how to kind of segment the data and come up with that particular customization, and then look into that kind of some side of personalization as well, to kind of being a little bit empathetic. But what happens that, I mean, typically when we get into the any kind of model or any strategy comes into the picture, which go into the live action into the system, then again the timeliness and the reliability of the data comes into the picture, because when we thought that this kind of results will come, at the point of execution, we can see that the population is shifting towards different segments, not equally. I mean, some kind of skewness we observe. So what is your suggestion that what step organization should take, or to kind of should take to ensure that the credit data or the kind of any different data that they're relying upon, that the timeliness and the reliability of the data and even the execution as well?
So I'll say that data reliability is very important, but to be true in today's conversations, what I saw from ma'am and what we have heard from Ms. Ankriti Sharma, it is not that only data reliability or data timeliness is important, it is also important that how frequently that data is getting updated. I was just thinking that from credit point of view, what we were comfortable with, that we are fetching a KYC data directly from a source. So we are having access to a UID platforms where we came to know the exact address of a customer. But what I have seen in these frauds, if the addresses in Aadhaar can also be manipulated so easily, so another source of information to us will also help that how frequently or how recent this address updation is. If a customer is just updating an address just 2 months ago, then it means it can be a fraud-prone customer for us. So the longevity of our data is also important. And with this, we can be a bit comfortable that the customer, whosoever is sharing his data, is concrete and is not fudged just to take a loan or to take a credit line. And another important point between many of our financial institutions, what we have seen is we have a right information about data, but while punching the data in a system based on which is the input to all various models or various, I'll say the BREs that we design, the data capturing errors happen there, and which results in the wrong outcomes of any decisions. And in our industry, people don't own the data as a sacrosanct. So I feel, so what we want to inculcate in our organization is that data consistency or data accuracy is everybody's responsibility. You can't say that it is the front-end job, it's a back-end job, be it a front-end field officer, be it a head office analytics guy for me. If we see any discrepancy in any input of our data, it is his responsibility to correct it, so that we can lend to a right customer, we can lend to the needy customer, and that will help us to build a stronger India going forward as we are looking. And that will help us to design a right models for collections as well. Because then I know that whatever information set I have of a customer is a right information, and whatever I am designing going forward is based on right set of information that I have. What we used to do till now, since last 3-4 years, is that we don't, for home loans, we are a bit reluctant to lend to a newly opened account of a seller. If seller says that I have opened account just 1 month ago, I want the consideration and the loan amount in particular, this particular account, we show our reluctance, because we believe a person who has bought a property around 1 year ago, 2 year ago, must be holding account. And that has actually helped us to stop many of our frauds. The impersonations of seller normally are incorporated with the newly opened accounts. And if, ma'am, from a government bodies, if we can get this help, that we are getting information about the customers, but if we can get information about the frequency of updation of that of the details of a customer, they'll help us to be more vigilant going forward. That's all from my side. Thank you.
Thank you. Thank you so much. So just would come to Mehul once more, that you mentioned that you have taken a kind of new AI/ML based approach. So I think many of the people over here, they would like to understand that when an organization evaluate a particular, say, model or any kind of new technology, even it's a system, that what typically goes into a CEO's mind while evaluating that. So from organization perspective, what typically that goes, that I mean, so that the people who are also pitching here, they also can give a perspective while bringing their solution.
So in our context, I'll tell you one thing. To buy a non-performing assets, the work starts from the due diligence, and there are various products. Everybody, bankers are there, so they know the valuation is the key parameters. So traditionally, we have the synchronized valuation parameters, but we were doing retail business since more than a decade, and we have acquired a particular geography or a particular product in a settled environment. Then if we wanted to take an exposures to a different product or a different segment, then we were little bit skeptical on the call we have to take on a large scale. So after this AI and maybe this flexible modular platform, we'll get the database, slice and dice, the productivity of the data, the decision making would be easy for us. And then in the given context, we have seen a lot of value add which has been done in last 3 to 5 years, where it is easy for a management to decide what underwriting we need to carry out at what percentage. And in terms of obviously the resolution also, the predictive models which AI and other modules which given nowadays has made our decision easy, and maybe a way forward we see a lot more potential as a part of due diligence and underwriting also. This tool would be helpful. It's just one of the insight which they will give on the valuation or maybe a resolutions perspective. So I feel this is a welcome tools for the bankers or the financial industries, where we can get at a greater pace with the business on this mechanism.
Thank you. So my next question to Neeraj, I think Neeraj, you mentioned that when you are getting the data and you're setting up the models and the AI/ML framework, so within the customer segment, we definitely look into the doing the customer profiling. But when it comes to collection, the kind of segment that we build, that there are some, pre-delinquency PDM models were there. There are some bucket X models are there, and then early warning. And so for these different segments, when it comes into the picture, and then it comes to the bucket 1, bucket 2, bucket 3 kind of strategy, and even the NPA 1. So how, maybe whichever segment, just as an example you want to pick, and try to help us to understand that how, when it comes to the collection related segment, the customer behavior related segment, how you work around that?
Yeah, again, a very good question. how to use, you can say, models or AML technique in the collection function. Today, every NBFC or bank for that matter is looking for efficiencies or reducing credit costs. Until unless you believe in technology, you will be very difficult to reach the level where we want to reach. In today's, like in our organization, we have got more than 5 lakh customers. To reach these 5 lakh customers, it is next to impossible with an average ticket of 1.3 lakh rupees and EMI size of 7,000 rupees. It will change the entire cost structure if I want to reach every customers. So we use lot of technology to reach our customers. So what we do segmenting our customer base basis their behavior. So I have data inputs from, you can say, application till onboarding. All data I have for my customer. Now, because of repayment, I have the behavioral contents as well from the customers, through which I divide these customers in various cohorts, that this customer propensity to pay is very, very high. This customer propensity to pay is very, very less. So on that basis, I segment these customers that whomsoever will be worked through which medium of communication. So one can be like SMS, another can be on WhatsApp, another can be on voice bot, another can be on like calling by agent, and then if it is a difficult customers, probably directly to the field. So in this manner, I divide my entire, you can say, communication as well as the approach to the customers. So with this, I am able to reduce the, you can say, workforce requirement, at the same time increase the efficiency of the system, and this is very much essential. Second thing is, if there is inconsistency in data, then we will try to find what sort of fraud can be possible. So the data provides me various information on something may go wrong, and we can be proactively work on that customer. So if somebody is continuously deferring his PTPs, so I have to be very, very, you can say, proactive in my approach of probably settlement, or you can say maybe a legal, those sort of understanding we need to have. Then we do lot of portfolio monitoring analysis through our AIML models, and these AIML models give us early warning systems that this industry probably is not going good, this sector is not doing well, this geography is not doing good. So these models are very much effective for collection if we want to reduce our cost, if we want to increase our efficiency, and if we want to be, you can say, customer friendly. If technologically, if we are aware that this customer can be contactable through emails, why to call such customers? If customer is very much comfortable in paying through, you can say, digital medium, why to get in touch with the customer in field? So you have to be very, very, and today everything is possible. You can have every information from calling to at what time he is responding, what sort of medium he is through which he is responding. So you can tailor-made your requirement basis the customer requirement. And with this, you can create empathy with the customers. You can be very well, you can say, behave with the customer, and you can work like a relationship model rather than a aggressive model in which some type customers abuse you, or you can say it may not go well with the collection pattern. So I feel AIML technique or automation of some of the automation, digital automation is paving the way for higher efficiencies, good collection efficiencies, and all the, you can say, growth path for the NBFCs. Thank you very much.
Thank you so much. Actually, I mean, however I try to kind of segment out this discussion, I mean, your one briefing kind of clearly shown us that the resilience, asset quality, reliability, and typically the customer centricity are so intertwined. So I would go to Rajaram to kind of touch upon on the point, maybe a little bit more elaborate way, that when we talk about the customer centric collection strategy, that what does that mean for an organization?
I think I'll just extend to what Neeraj and Rishabh said. Uh, our objective obviously is to increase the collection efficiency. Whether it is through your AIML model where you reach the customer, fastest way to reach the customer, or the fastest medium, where he respond. I think it's about understanding the 360-degree view of the customer also, because obviously when you onboard a customer, you understand that what kind of persona that the customer is. Whether he's a salaried employee, whether he's self-employed, whether he's an agriculturist, and you know the persona of the customer. And I'm sure every organization knows the repayment pattern of those customers. Um, so when we talk about customer centricity, I think it's about understanding, first whether, what is the reason for the default. I mean, whether it is situational, whether it is temporary, whether it is fraud induced, or whether it is any other reason that has gone into collection. I'm sure no customer would want to default. That's the basic. Unless you've done your due diligence and unless you've done your credit underwriting, and I'm sure every organization has their own model. Now, once the customer starts defaulting, or Neeraj spoke about the early warning also. The first step is to understand the signs of the customer getting into stress, right? I mean, that that he's taken more loans outside your domain. He's taken more of personal loans, or he's borrowed beyond the number of trade lines that you see increases in the short period of time. Then you understand that there is a stress in the customer's domain. So I think it is more of engagement with the customer even before he gets into delinquency. Understand what he wants. There are remedial measures even before he turns into a delinquent customer for you. I have seen customers whom you kind of help them to maybe consolidation of debt could be one option. You could also partner with him to figure out is there any temporary issue that is affecting him. So I think when you say customer empathy, it doesn't mean that you go soft on the customer, but I think more understanding why he defaulted and what is the resolution plan for you. It could be in different stages. It could be in early stage where he's just defaulting for some time, and then he could come back once the business improves. Or he could become a chronic defaulter where he's lost all the options, and then you're ready with your legal recourse, and then you also again partner with the customer to understand how amicably can probably, if it's a secured loan, then how do you dispose of the property, or if it is a unsecured loan, then what is the best settlement that you can come out with. I think there is no one solution fits all. It has to be a hyper personalization that we all spoke about. Every default customer is handled in a different way, and I think what you should obviously see is the value of time also. You could still go on and our legal systems are, I'm afraid the legal system not that great, where you could find a resolution within time. So if you have a 360-degree view of customer, understand the customer behavior, also partner with him in the resolution. I think these are all part of, I think I would say, customer empathy.
Thank you. Thank you so much. I will just quickly go to Rishabh, that most of the rest of the people are partnering to one particular organization, that they are getting an organization specific view. But I think that you are the most privileged one over here who has a kind of industry wide view working with different organizations. So just wanted to have your understanding and your view, that in your opinion, that how much we have done and how much we are yet to.
No, a very important question. And as you asked this, right, I was looking at the stage, and I'm obliged that all the four lenders are live on our platform. So we maybe get a holistic view of how the lending ecosystem is going, right, and what exactly is the main problem statement at particular point in time. So what actually I also want to stress upon the fact is what Rajaram was saying. Personalization came a lot in marketing. Like you have to send very specific communication, you have to increase the time people spend on your website, you have to do this and that, right? But when it comes to collections, it is not thought through with the same science. It is exactly that you have to just collect by hook or by crook. So you don't think from a personalization standpoint that which channel customer is responding to, what exactly they are trying to do. is it a situational default or is it an intentional default? So a lot of these categorizations are happening over time now across the lending, but uh, overall ecosystem is adapting to new age technologies. For example, we have seen that in pre-delinquency, right? Calling has reduced drastically. A lot of bots have come in almost across organizations, whether it is a fintech or an NBFC or a bank, right? All of them have adopted it. Now, second, I think the way forward on this is how you can increase the efficiencies of those bots, or maybe introduce new channels. Like for example, we recently had introduced video bots, which essentially instead of a voice, you can actually send a video which can interact, right? So that works really well in rural areas or tier 2, tier 3 markets. So you have to keep on coming with technology, but all the financial institutions are open to it because there's an ROI. And collections is an ROI game, right? It is very easy to measure efficiencies in collections. It is either the time taken to collect or it is the amount collected. So it's a very simple match which you are able to easily gauge whether my cost has gone down or whether my time to collect has gone down or whether my overall collections have increased. So experimentation and hidden trial is happening across the industry. Almost everyone is open to it. I would say, like obviously banks have to go through a lot of compliance because risk governance is the most crucial key. Uh, in terms of priority, I'm not saying others don't do it, but for fintechs and NBFCs, it's a pretty relaxed environment where they are happy to experiment on a lot more use cases than banks. But yes, that's approach. I think we also do a lot of experiments with fintechs and NBFCs and then go to the banks. That this is a tried and tested playbook now. That there's hardly any risk because it's obviously it's a risk reward game, right? Banks are okay to firstly see that happening in the industry. So that is fine, right? Their overall uplift they can bring in because their underwriting is a little stricter than others, right? So the overall uplift or improvement they can bring in might come late at a later stage also. But overall, as an industry, we are seeing the technologies being adapted. From an empathy standpoint, as in when we also saw that a lot of customers are genuinely in distress. It's not an intentional default, but a situational default, which might improve over time. And also, there's a lot of awareness issues which customers have. No one is aware about what a CIBIL score impact would do. Or even it's very difficult for them to read a CIBIL score. Like if you see, right, English speaking population on others, maybe that's hardly 5% of the overall population who's in the lending ecosystem. For the remaining 95%, it is very important that someone even explains them what a credit report looks like and how to even read that and what impact it can create. So on the same lines, we understood some of these big problem statements even from a borrower standpoint. Like earlier, we were trying to solve a lot of things on digitization from a lender standpoint. Recently, we have launched another application which is borrower facing, which is just to help them understand credit reports by the name of Fix My Score, which just educates them on what things they need to do, how they need to repay, etc., and just give them more education around the process. Because in collections, I think the approach was a little different. That we were asking for money and not trying to explain that it is harmful for them in the long run. And also the reason is that it was looked as a cost center. Mostly collections is looked always as a cost center. It is never a revenue generating center. But in the recent times, I have seen that approach is changing. Like it is, if you spend X amount, you will maybe get enough ROI and you will be able to collect 10X, right? So from a mindset of a cost center to a revenue center has changed, like post-COVID, it has changed drastically. But right now, a lot of investment in technology, a lot of investment on the new methods to collect is happening across the ecosystem, which is a very good thing because that essentially will increase the speed of credit like disbursals overall. So it's a very good positive movement we are seeing, and hopefully, I think private sector has adopted it full time. Public sector banks are starting to adopt it. We heard about PSB Alliance. We heard about a lot of new measures which are being taken, which is just to like adopt the similar technologies which are there and tried and tested in private sector. And public sector represents 60% of the retail market, right? At least. So that also will be very crucial as to see how public sector banks are adopting some of these things. It has started, but yeah, there's definitely a long way to go.
Thank you so much, Rishabh. So this interesting conversation maybe will come to an end with a comment from Piyush, because whenever we discuss about collection, it is a kind of deciding eventually the credit cost and how our ROA will look like. But when we talk about future proofing, then the concept of credit and provisioning comes into the picture. We know that the IFRS 9 models are there from the taking care of the impairment on the credit side. Basel models are coming there. But when it comes to kind of not only the models, but all the systems and platforms that we're talking about, what does it mean for you that how organization can ensure or kind of try to keep flexible for the future looking uncertainty, take care of the future looking uncertainty for adapting any platforms while taking the decision?
So I'll say the kind of digitization we are going into, it is very important that whatever models we build or whatever platforms we operate on should be at most flexible, because the kind of environment we are working on is very dynamic. Be it customer sentiments or be it the regulatory guidelines, be it the behavior of a customer, you need to change your models very frequently. You can't work in a isolated way or in a defined set of processes which has to be changed, I believe, as frequent as sometimes in a week's time as well. So in credit, we normally take a feedback from the kind of performance we have on our portfolio, and we modify our policies, we modify the processes, a particular customer segment, particular geography, or particular income program, and that has to be a real time. Otherwise, if the platform is rigid and it will take a time to develop or to modify, then you might lose a lot of money in the process. Second, from collection point of view also, I'll say the digitization is very important, but there should be a flexibility so that the experience can be humanized, like Rishabh said, or I'll say Mr. Manian said that there can be situational defaulters as well. So what we feel or what we believe, when you have underwritten a customer, he's a genuine customer. He genuinely want to purchase a house, but there are the instances like job losses or some medical emergencies. So in that particular scenario, in what I personally feel that the digitization sometimes takes away the empathy. So it has to be a blend of digitization and a humanization, wherein we need to guide the customer also that what is the best step for him to take. A very recent example I'll tell, that in one of our customer, the customer was holding multiple assets. He was into deep stress, the family life was disturbed, was not able to pay the EMI, business was disturbed. Somebody guided that you please dispose one of our asset, settle these loans, and then you have enough money to start your life again. He agreed. But somebody parked him a figure of say 1 crore for an asset, and he was not ready to dispose and that particular asset anything less than 1 crore. So because that's a figure fixed in the mind. So I had an offer of 1 CR at point of time, I'll not dispose it for 96 lakhs now. So a guidance at that point of time that in case you will delay, you are losing anyway these 4-5 lakhs of interest in a span of 8-9 months further, which is adding further distress to you, is the right guidance that any financial institution can give him. So when we partner with the customers for that kind of long relationship, it is our moral duty also to guide him correct and to help him in such situations where he is not an intentional defaulter. And to accommodate all such situations, if our platforms or our systems are not flexible, we can't segregate these customers, because these scenarios are very different and very, I'll say, frequently changing, and very, you can't, you have to customize sometimes. So that's why the flexibility in platforms is very important. That's all.
Thank you so much. So with this, I will call it for this particular panel. And thanks to this brilliant panel for touching up every point. And also, I think it's very comforting for the entire audience that all the people, when they're talking about collection, on the second statement only, it is again and again coming empathy. So it's a completely wrong assumption that only the sales agents are your friends. Even the collection agents are also friends. They're on the field to help you out only, trying to improve the credit related literacy, your how it is kind of affect your credit score and eventually kind of a borrower and something like that. And for the time crunch, I mean, you can see she's already there, where if you want to kind of interact with our panel, they will definitely be around and can have interact with them. Thank you so much, guys. Again, thank you so much.
Thanks.
Well, let's have a thunderous round of applause, please, for all our esteemed panelists. Thank you so much for your valuable time and for the inputs. Please do feel free